Back in the saddle, team, after that COVID disaster. Woo! Man, what a mess. I wouldn't wish it on anyone, but if you do get COVID for some reason and you get the doubly bad version that I had, number one tip is to constantly think about food until you think of something that sounds good. Think about things that you ate when you were much younger, like when you were a little kid. Those seem to be the things that sound good. Very weird. At least this is the way it was for me. I ate a lot of Honey Nut Cheerios. Whatever it is that sounds good, eat it. Anything, whatever it is, just eat it. You need food to fight that thing. It's a freaking beast. Okay. Not 100%, but enough to get back in the saddle here. There's just too much going on. The market is changing. Things are shifting. There's fun stuff that's happening. We are, of course, Derrick Evans here, VA home loan specialist. If you have a question about a VA home loan, know someone who wants to get one, have them give me a call or shoot me a text. We're actually doing let's see here. I'm back in the saddle, but I'm a little rusty. Here we go. Yeah, we're going to look at rates today. It doesn't look good. Doing a VA seminar. I know a lot of people are sort of back at doing these, and I think that the general public probably isn't as excited, to get back into a seminar room as all of us who haven't done seminars for over a year are excited to do them. But if you know someone who wants to learn about the VA home loan benefit, I'll post a link in the video. You can send them my way if you'd like. We're going to educate on Wednesday night, 6 p.m. down our office in Chula Vista to Otay Ranch Mall. Be fun, free food. I'm bringing my A game. I got jokes this week, team. I got jokes. Okay. Let's look at this thing. Let's be honest with ourselves. This is going to be really important over the course of the next couple of months. It's always important to be honest with yourself, but we got to really be honest with ourselves here as we're heading into some interesting times. This is summer. Kids should be out of school now. I think most kids are. And so the San Diego market, remember, is always a little strange, especially at the very beginning of summer. A lot of people are planning trips. They've been planned for a while. Family vacations are happening. And so sometimes the market will feel like it stagnates. We also have other things that are impacting that right now, such as listing prices catching up to where homes are more likely to sell. Whereas for multiple months there, we had listing prices way below where homes ended up selling, which created more of a frenzy atmosphere. That frenzy atmosphere is getting calmed down quite a bit. So we can kind of expect, that to all sort of put a little bit of ease on this market. You may feel like it's slowing down a little bit. This is one of those opportunities, I say, if you're a buyer. I just talked to one of my pre-approved buyers who said that they're writing an offer on a home that's been on the market for a little while and doesn't have an offer. And it's not in perfect shape or anything, but man, when was the last time you heard that? So, hey, that's your opportunity right there, because I don't care what it is. A month ago, people would have fought in the streets for it. So keep that in mind. All right, today, let's just take a look at this. Down 25 basis points. Tough day. Tough day. I'll show you the technical side of it. You never want to be down 25 basis points. Remember, when bonds go down, interest rates go up. And so, we never want to see this. But as I've warned you, this is likely what's going to be happening here. And there's a number of different reasons why, but inflation is the main thing. Now, if we just look at the technical aspect here and the movement of these bond prices, see, when they were going higher here, this was good. But you remember when I talked to you about this head and shoulders and what this just in a normal, chart pattern typically does. Usually this head and shoulders, things go lower. We got a little sideways movement here, and I was happy about this because, believe me, I locked the heck out of loans. Everything that came across my plate got locked. And even right now, even though we haven't gotten issues, there's been no lock alert from Barry here. This is mbshighway.com, Barry Abib's site. No lock alerts, although I've been screaming to lock this whole time. All of this right here, this entire box right here, lock your loans. Why? Inflation, chart formations, and now we've just really breached every level of support. Look at all these support levels. Here's 1, 2, and that's the 100-day moving average. Big one. We had an indecision candle there, and it went the wrong way. It went against us. Then our former, well, now resistance, former support. So we had 1, 2, 3, 4, 5 in the last 3 days. We have 5 big levels of support that have all been breached. And while this could still move a little bit today, technically not 2 p.m. yet, which is when you really see this, put a lid on it for bonds for the day. This could move a little bit higher, but it looks like we're going to close below, which means we're definitely looking at 103.20, which still isn't a bad price for a 2.5% coupon that we're following here. But just as far as what we're used to, as far as what the market's used to, this is not a good look. So again, one of those things I don't want to be right about, but it looks like it looks bad. It doesn't look good. Let's put it that way for mortgage rates. So we'll keep tracking this. Hopefully tomorrow we get a bounce. I mean, you never know. We could gap up, and then we only need this much to cut back through some of this. I hope that's what happens, but just as of right now, this does not look very good. So the market's leveling out a little bit, and a few things happened today. I want to make sure that you saw. Paul Tudor Jones, big time investor, someone that people listen to, basically saying, hey, go all in on the inflation trades if Fed ignores higher prices. Well, you can't tell me that these guys haven't been watching this. And how long have I been telling you about this? A month? I mean, I was out with COVID for 2 weeks. My back was killing me for 3 weeks before that. I feel like I've been out forever. This has been going on for a long time. So my guess is these guys like him, they've already placed their bets, and now they just want to come talk about it because they want you to follow in, right? They always want you to pile in on whatever they own, right? And so he also said that the Fed's credibility is at risk with their inflation view. Agree? How long have I been telling you that? Weeks and weeks and weeks and weeks and weeks. He also said he likes Bitcoin and that it's a great diversifier to protect his wealth. Now, I don't want to talk a lot about Bitcoin. I think the best thing you can do with Bitcoin is not look at it. It is a wild ride, Bitcoin. Let's see here. Close to 40,000 again. Crypto is a wild ride. Bitcoin is, there's a lot of movement. If you watch it all day, it will mess with you. It will cause you to make bad decisions. The best thing you can do if you're going to invest in Bitcoin, first of all, if you're going to invest in cryptocurrency, make sure the majority of what you own is Bitcoin. That I feel very confident about. If you're going to own Bitcoin, try not to look at it. Or if you're going to look at it every day, at least know in your mind that you have a 5 or a 10-year time horizon. Right now, I won't even consider selling my Bitcoin until 2025. I want to get through this epoch into the next halving before I even consider it, unless it hits a certain price in the meantime, which would make me a rich, rich man. If that happens, then fine. I'll get out. And, you guys will hear a lot more from me because I'll probably do nothing but make videos all day from my yacht. But let's see if that happens, right? It probably won't, but have a strategy with it. Make it a long-term one. Do not look at the price every day and wonder whether you should get in or out. That you will get whipsawed and you will get your booty kicked. And I don't want anyone on here to get their booty kicked because that sucks. No! Although unfortunately it happens often. It does, especially with Bitcoin and things like that. What's up, Juan? It's good to be back, man. Thank you. Thank you, thank you, thank you. Just trying to shed some light here on what's going on. They're always going to come up with, different reasons why these different things move. The U.S. markets today were struggled in the beginning, but you'll see stocks right now are almost like a helium balloon. You can't hold it down. You can't. Why? Massive market manipulation. Massive market manipulation is, basically there's so much money pouring in. How could it go down? Who would want to fight the Fed? Who would want to short that? I don't know. Not a good idea. And look at oil. Remember what we talked about oil? Gosh, I hope you guys got in on this with us at like $40. Now it's $71. These stocks that track oil, the USO, Chevron, Exxon, what I've been telling you about for months and months now, all hitting all-time highs through just roofing. And this is going to keep going. Now, the economy is going to justify this, especially in a reopening scenario now where we have things really opening back up. And what a great thing, right? What a great thing. Like, I think I got COVID at the very end of this thing, which is really weird. But it is what it is. And so for most people, they feel like they've either already gotten it or they've got a vaccination and they're in the clear, and we're going to open back up. And this is great. This is really, 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 really great for so many reasons. It's also going to be a great excuse to move the market, to swing the pendulum too far in the positive direction, which has already been done and is continuing to be done. So be careful out there. Be careful out there. Don't load up a ton right here. If you're getting into stocks, scale in with everything. Scale in, scale in, scale in. And when we look at the real estate market, which I want to talk about here in just a little bit of detail, the real estate market is going to go through a shift here, where we go from a pure frenzy to a more normal transactional pace, but still seeing higher prices. So we're going to see the transactional pace get a little more normalized. In other words, not going to be 25 or 30 offers on every single home. There will be 25 or 30 offers on some homes, but there's always been in this market. If you have a really nice place at a good price, you're going to get a lot of offers. You're not going to see it on every single home like we have in the past few months. It's going to slow down a little bit, but you're still going to see prices increase because there just simply is more demand than there is supply. And that's really the only thing that is going to affect this market moving forward. The fact that we have, where is demand? People who keep calling for a crash, here's what I need you to know. There cannot be a crash when the sentiment is balanced. So there's plenty of people who are negative on real estate and think, oh, this is it. We're at the top. Don't buy. What are you doing? There's plenty of people who think that. Plenty of people like myself who look at the data, understand inflation, and understand supply and demand. And we know that, okay, this trend is going to continue for a while. If the sentiment is balanced like that, you can't have a crash. The way you crash is when everyone is on one side or the other. So if everybody is in belief that the market's going to go higher, that's when you can crash lower. If everyone is in belief that the market has to go lower, a lot of times that's when it will go higher. So just keep that in mind. Know that there is going to be a little bit of a simmer down now, and it's something that can be taken advantage of. If you have questions about a VA home loan, give me a call, shoot me a text. That's what I'm here for. That's what I focus on. That's what I do all day, every day. But happy to help answer your questions, get you pre-approved to help you save some money. Right now, I just did a cash out REFI video because a lot of people are asking about cash out. This is something that people who already own homes or bought a home, even in the last year, year over year, according to redfin.com, year over year in San Diego, we are up 20%. The median home price is up 20% year over year. So you bought a home a year ago, you're up 20% on average. So some people will be more, some people will be less. A lot of people asking who own homes, what do I do with that? How do I win with that? Why does that help me? And that's where the cash out refinance can come into play, whether you're diversifying investments, buying other properties out of state, whatever it may be, consolidating debts, adding on to your home, ADU, additions. There's so many different things that you can do. Just don't forget that equity is an asset, and I've got a video I will play for you, I will post inside of this thread if you want to check that out as well. So have a great day, team. I'll keep you updated, back in the saddle. Whew, be careful out there. COVID's still around, and it sucks. So vaccination might be a good idea if you're into needles and all that, experiments, which I'm not. But definitely be careful out there. It's still running around. Take care of yourselves, and if you get it, focus on food. Your body needs lots of food to fight it. Have a great day.